Good morning, everyone, and welcome back to the channel. Today we are diving into a developing story with massive implications for the global economy, the escalating geopolitical crisis in the Strait of Hormuz. This narrow waterway, a critical choke point for global energy supplies, is once again at the center of international attention, and the financial markets are reacting in a big way. For those unfamiliar, the Strait of Hormuz is arguably the most important sea lane in the world for oil. Roughly 1/5 of the world's total oil consumption passes through this strait every single day. That's millions of barrels of crude oil and liquefied natural gas heading from Middle Eastern producers to markets all across Asia, Europe, and North America. Any disruption, or even the threat of a disruption, in this region can send shockwaves through the entire energy sector. And that's exactly what we're seeing now. Recent incidents, including naval standoffs and heightened rhetoric from key regional players, have created a cloud of uncertainty over the strait's security. This isn't just a political chess game. It has immediate, tangible effects on the price you and I pay at the pump and how businesses operate globally. The core fear is a potential blockade or military conflict that could halt the flow of oil, triggering a severe supply shock. Unsurprisingly, the oil markets have been the first to react. Brent crude, the international benchmark for oil prices, has seen a sharp and sustained rally over the past few weeks. We've witnessed prices surge past key resistance levels as traders price in the increased geopolitical risk. The volatility has been intense. Every headline, every diplomatic statement is causing prices to swing. This risk premium added to the price of oil reflects the market as anxiety about a potential supply cutoff. Major shipping companies are already reporting higher insurance costs for tankers transiting the strait, a cost that ultimately gets passed down the supply chain to consumers. This isn't just about the price of gasoline. It affects manufacturing, transportation, and plastics, virtually every corner of our modern economy. But the story doesn't end with oil. Whenever we see this level of geopolitical instability and fear in the markets, investors flock to traditional safe haven assets. And right now, the spotlight is shining brightly on gold and silver. These precious metals have a long history of acting as a store of value during times of crisis. When confidence in currencies and other financial assets wavers, investors often turn to the perceived security of physical gold and silver. Let's look at the charts. Gold has broken out, soaring to multi-year highs. The momentum has been incredible. This surge isn't just driven by small retail investors. We're seeing significant inflows into gold-backed ETFs or exchange-traded funds, which is a clear sign that large institutional players are reallocating their portfolios. They're seeking shelter from potential market turmoil and hedging against the inflationary pressures that a prolonged oil crisis could unleash. If oil prices stay high, the cost of everything else goes up, devaluing cash. Gold is seen as a reliable hedge against that kind of inflation. Silver, often called gold's little brother, is also having its moment. While it typically follows gold's lead, silver has its own unique dynamics. It's not just a precious metal, it's also a critical industrial metal used in everything from solar panels to electronics. So, while it benefits from the safe haven demand, its industrial component can sometimes hold it back if a crisis is expected to cause a global economic slowdown. However, in this current environment, the monetary aspect is winning out. Silver has seen a spectacular rally, in some cases even outpacing gold in percentage terms. This high beta move, as traders call it, has attracted a lot of speculative interest, further fueling its ascent. So, what does this all mean for the average investor? First, it's a stark reminder of how interconnected our global economy is. A conflict thousands of miles away can directly impact your portfolio and your cost of living. Second, the current situation highlights the importance of diversification. Having a mix of assets, including those that can perform well in times of uncertainty like precious metals, can help cushion your portfolio against shocks in other sectors. However, and this is crucial, chasing these rapid price movements can be incredibly risky. The situation in the Strait of Hormuz is fluid and can change in an instant. A diplomatic breakthrough could send oil prices tumbling and take the wind out of gold's sails just as quickly as they rose. Acting on fear or hype is rarely a winning strategy. It's essential to have a clear investment plan and stick to it, rather than making rash decisions based on breaking news headlines. Looking ahead, all eyes will remain on the diplomatic efforts to de-escalate the situation. Any news of negotiations, sanctions, or further military posturing will continue to drive volatility in these markets. For the oil market, traders will be watching inventory data and statements from OPEC Plus to see how major producers might respond to a potential supply disruption. Could other countries ramp up production to fill the gap? It's a complex puzzle with many moving parts. For precious metals, the key driver will continue to be global risk sentiment. As long as uncertainty reigns, gold and silver are likely to remain well supported. We'll also be watching central bank policies, particularly from the U.S. Federal Reserve. If this crisis pushes the global economy toward a slowdown, it could prompt central banks to cut interest rates, which is typically another major tailwind for non-yielding assets like gold. In summary, the crisis in the Strait of Hormuz is a classic geopolitical event that is sending ripples across the financial world. Oil prices have spiked due to fears of a supply disruption, fueling inflationary concerns. In response, investors are piling into the traditional safe havens of gold and silver, pushing their prices to significant new highs. While this presents opportunities, it also comes with extreme volatility and risk. The best course of action is to stay informed, understand the driving forces behind these market moves, and ensure your own financial plan is robust enough to weather the storm. Don't let fear guide your decisions. We will continue to monitor this situation closely and bring you updates as it develops. It's a critical story for everyone, not just traders and investors. Thank you so much for tuning in today. If you found this analysis helpful, please hit that like button and consider subscribing for more in-depth reports on the stories shaping our financial world. Stay safe, and we'll see you in the next video.